This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Well, since last time, hopefully you've been revising through the bases of assessment that apply in the opening years for an unincorporated trader. Now, those bases of assessment stay true for each of the relevant tax years, from the first tax year, where, as we know, we use an actual basis of assessment, through to, well, whichever year it is, second, third, or sometimes even the fourth tax year, before we then apply CYB. We'll then stick with current year basis, CYB, all the way through till we get to the year of cessation. So, let's see, therefore, of course, you may not have wouldn't have been necessary for you, being experts in the subject of opening years by now, to have gone back and revised. But let's see if we have sorted out what happens. The key issue here when we have losses arising is that we cannot get the benefit of a loss twice over. So if a loss-making period falls, as it will, into more than one basis period for more than one tax year, then the loss must be allocated to the first of the tax years in which it falls. We cannot have that same loss over again just because that same basis loss-making period happens to fall in the next tax year of assessment's basis period as well. So we get it once, and that is all. You still need to know your bases of assessment. So let us therefore have a little go at an example. Now, remember the approach. Whenever it's an opening year's example, first thing we always do, pick up the start date. So here we have a trader commencing to trade on the 1st of October 2020. Therefore, first thing that we do, determine what is the first tax year. The 1st of October 20 falls in, of course, the 2021 tax year. What basis of assessment do we apply? We always apply an actual basis of assessment in that first tax year. What does actual mean? It means from that start date through to the following 5th of April. And almost inevitably, to determine what that assessment is, we're going to have to apportion some period of profit, or now, as we'll see, some period of loss. So what have we got? Started to trade on the 1st of October 20, and then the trader is going to prepare accounts to the 30th of June in each year. So following on, therefore, from the 1st of October 20, the first such period end date that they get to is the period through to the 30th of June 21, in which period we've sustained that loss of £48,000. Now, what we also know in opening years, as we have just said, is that we're going to work through to and then use, as soon as it is available, our current year basis. Now, CYB demands an accounting year end. So what is our first accounting year end? The first year end date we have is the 30th of June 22. So in which tax year, using CYB, does that date, the 30th of June 22, fall? And obviously that is in the 22-23 tax year. So what we now know is in 22-23, we'll use current year basis. What will that be? A profit of £24,000. In 2021, our first tax year, we'll use actual. That's from the 1st of October 20 through to, as we said, the 5th of April 21. All of which period is within that opening accounting period. So it will require an apportionment of this trading loss of £48,000. It equally means that we know what to do in 2021, we know what to do in 22-23, the second tax year, the missing year here, 21-22, is always the tricky one. Now, we will work to that in a moment's time, but let's just deal with what is our starting point here, the 2021 tax year. So remember the information that if it is a written question that we need to lay out. What, first of all, is the tax year? It's the 2020-21 tax year. What is the basis of assessment? It is actual. what is the basis period? That, of course, runs from the start date, the 1st of October 20, through to what will be the following 5th of April, the 5th of April 21. Now that period, of course, we do our apportionments, as you know, to the nearest month. That apportionment there is a 6-month period, and it's 6 months taken out of a 9-month period in which we made that, what was it, a loss of, there's the figure, £48,000. So 6/9 of 48,000, 2/3 of 48,000 therefore, and that should be a loss of 32,000. Now, because there are losses, we need to record not just an assessment, but the amount of loss that will be available for relief. We'll then look at what those particular available reliefs are and then be able to choose from them which we think will be the most worthwhile. So what we need to have here is 2 columns, one to record the loss that we have, there 32,000, and as ever to record the assessment. If there is a loss, we know that the assessment is nil. We'll come back to and consider what options there are for the use of that loss in a few minutes' time. Going through, though, we'll know that we'll then need to deal with 21-22, but we also know when we get to 22-23 that is going to be a CYB assessment, and we know which it is. For 22-23, the accounting year ended the 30th of June 22, and that was a profit figure. But the second tax year is always the problem one. Okay, 21-22 is the second tax year. Remember how we start the process for the second tax year. We ask a question and hopefully answer it correctly, which is, do we have any accounting period ended in that second tax year, 21-22? Well, there is our opening accounting period running to the date 30th of June 21. In which tax year does that accounting period end date fall? It is falling in 21-22. So yes, we do have an accounting period ended in that second tax year. Next question is, how long is that period? If we were lucky, it would be a year end. We'd have prepared accounts to our normal year end date, or what from then will be our normal year end date. And that would allow CYB. Well, here, of course, it isn't a year end. So if it's not a 12-month, it's not a year end period that we're dealing with, it's either going to be one of two things, either less than 12 or more than 12. Short period or long period. Less than 12 months, more than 12 months. What do we have here? Well, this period to the 30th of June 21, as we know, is a 9-month period there. So we have, in the second tax year, a short period, one of less than 12 months, ended in that second tax year. In which case, therefore, which 12 months worth of profit will we assess in that second tax year? Now, okay, it's not going to be all profit here, but what will be our basis of assessment? And that, where you have a short period ended in the second tax year, which 12 months? It's the first 12 months of trading. Well, when did we start to trade? That was the 1st of October 20, so a date, therefore, 12 months later, will presumably be the 30th of September 21. So what goes into that period, therefore? We have all of the opening 9-month period that went through to the 30th of June 21. And that was a loss of £48,000. That was our opening period of loss, the 9 months to June 21, 48,000. So, question. Can we now, therefore, have all of that loss available for relief in this second tax year? And the answer to that, I hope you'd agree, is clearly no. Because we have already gained the use of 32,000 of that £48,000 worth of loss in the previous tax year, our first tax year, 2021. So we cannot have it again we get to use the loss just once, where it falls into, as it may as here, consecutive tax years. That loss will have been allocated to the first tax year, so you can't have it again in the next tax year. So less, therefore, what we have used in 2021, and that was £32,000. Take the 32,000 away, leaving us with £16,000 of that loss. So is that the loss that would be available for relief this period? Well, answer again, no, it isn't, because that is only the first 9 months of trading. We need the first 12 months of trading. So what we now have is a further 3 months of what is a 12-month period. The year ended 30th of June 22. 3 months out of a 12-month period in which we made a profit of £24,000. Therefore, 3/12 of 24,000 is going to be a profit of £6,000. That therefore brings the loss down to an available £10,000 of loss that may be used. What we have here is that we have already used our 32,000 in the 2021 tax year. We take it out of the full loss that falls into the basis period for the second tax year, leaving us with £16,000 there. But we're now deemed to use in aggregation some £6,000 of that loss against that profit. If we didn't have that 16,000 loss there, if it were nil, that £6,000 profit would be a profit for the basis period and would be assessed in that year. But we've been able to take out that profit of 6,000. We therefore used a further £6,000 of the loss in aggregation in bringing us down to a £10,000 loss. That's the loss for the year. That is a nil assessment. And again, it is that figure that we will look to use. So in the first year, 2021, there was £32,000 worth of loss available for relief in the normal way against the total income of the current tax year and or the preceding tax year, carry forward to set off against future trading profits of the same trade there. Having used 32,000, we hope, in relation to that first tax year, we then got a further £10,000 worth of loss relief available for 21-22. Now, of course, 32 plus 10 is only 42, but we made a £48,000 loss. There's a £6,000 difference. Of course there is, because we've just used £6,000 of this loss in removing the profit from this tax year's assessment. So in that way, we will have gained relief overall for the 48,000. So let's just repeat what loss reliefs we have available. Looking at the first tax year, 2021, and for 2021, therefore, we had a loss of, what was it, £32,000. What here are the options? The options that we have are to set off against the total income of the current tax year, 2021, and or the preceding tax year, which of course would be 1920. And even though we had not commenced to trade, there had been no trading in the 1920 tax year, you still have those loss reliefs available. And if, of course, in making such a claim for the current tax year and or the preceding tax year, if for the tax year in which we've made the claim, After setting off against total income and reducing that total income to nil, we still have some loss left over. Then, as we saw the previous time, we saw that we would be able to extend that loss, that extension claim, to turn what was a trading loss into instead a capital loss and set it off against the net gains of that tax year. So we've got total income for current and or preceding tax year, for either of those years for which such a loss relief claim has been made, and having made it, there's still loss left over, then the extension claim is possible to go then against the net gains of the tax year. And or, of course, if there is loss available, we get to carry forward that loss. We get to carry forward. We get to carry forward, and if you carry forward, then you set off against future trading profits of the same trade. Future trading profits of the same trade. Now, what I'd like you to do here is to, I can wind it back to there, we have dealt with the assessment for 2021 and for 21-22. Could you just go on, please, and establish what is the assessment for 22-23 and see if you identify anything of interest that you've seen before in opening years that will arise when you look at the basis periods used in that third year by comparison to the basis period you used in the second year. See if you can pick that issue up. So pause now, please, and then we'll continue. Well, let's see how you've got on. Getting the assessment for the 22-23 tax year shouldn't have been a problem at all. We already know it. On first reading of the question, we picked up that the first full year end that we had was the year ended 30th of June 22. Therefore, using CYB, that would be assessed in the tax year 22-23. The point that is at issue here is that we are now assessing all of that £24,000 worth of profit. All of it. What did we put into the 21-22 tax year? In 21-22, our basis period was the first 12 months. And although that took up all of the opening 9-month period of loss, what it also did was to include within it 3 months worth of the £24,000 of profit. That gave us that £6,000 profit there. And it meant that we used, of that £16,000 of loss remaining from the £48,000 sustained in the opening period, £32,000 had been used in the first tax year, the 2021 tax year, but then £6,000 of that is now deemed to have been used against that profit figure. And that brought us down to just £10,000 of relief being available. So it means that that £6,000 of profit has fallen both into establishing the nil assessment for the second tax year, 21-22. It is also then going to be assessed in, as we see here, 22-23 tax year using CYB. So if we've got a period of profit that falls into more than one tax year, what is that in opening years? It is, of course, an overlap profit. And you've got, therefore, to identify that between the second and the third tax years, where 3 months of and then all 12 months of the profit period of 24,000 has been included within that assessment for 22-23. We've doubled up on the 6,000. We have overlap profits of £6,000. What do we do with overlap profits? We will, of course, eventually, for the final tax year of assessment, deduct the overlap profit in the form of overlap relief and reduce what would otherwise have been the assessment for that final tax year. So did we pick up, therefore, on the overlap profits and the overlap relief that would be available? Now, of course, what we spoke of in terms of loss reliefs dealt with that first loss of £32,000, where we identified in relation to it our options were against total income of current tax year and or preceding tax year. Without knowing what those income figures are, we would not, of course, be in a position to advise whether either of those or both of those might be a good idea. We also said that if you made such a claim for either of the 2 tax years and you eliminated all of the total income for that tax year, that any balance of remaining loss would be available to go into an extension claim. That having checked out what the maximum amount of that loss would be that would be available for relief, it could then be turned into a capital loss and be set off against the net gains of that tax year. What we could also, of course, consider doing is just carry forward all of that loss or any part that remains after any of the other claims in the current and or preceding tax year have been made, and that would be a carry forward against future trading profits of the same trade. As we already said, when we get to 22-23, we have a CYB assessment of £24,000. That means that 3 months of that 24,000, 6,000 has come up again. That becomes an overlap profit. It also meant, of course, that going back to 21-22, that we had a loss of £10,000. There we have that loss of 10,000. So exactly the same reliefs as we've already spoken of for 2021 would now be available in relation to that £10,000 of loss there. The current tax year for it, as we've seen here, is 21-22. So again, set off against the total income of 21-22 and all preceding tax year 2021. The extension claim, if available, if you had gains, if you had any losses left over after the claim against total income, or thereafter carry forward against future trading profits of the same trade. Okay, now we've revised all of the loss reliefs that we already know about in the context of what those losses falling into the first tax year, falling into the second tax year, what loss reliefs would be available. But what we also have in opening years, as we mentioned in our introduction to this chapter, is a specialist opening years relief. And that's what we'll move on to next, but only after, of course, you've had a little chance to practice your newly found knowledge in the context of this little example here, example 4, where you need to calculate Matthew's trading profit assessments and the losses available for relief in respect of all the relevant tax years. I've shown you the approach. You've got a similar exercise here to what I've just shown you. Could you have a go at that, please? Then check that out with the model answer in the back. You go off and do that, pause here, and we'll come back, have a quick look at that answer, and then move on to look at, as you can see what's coming up next, this new specialist opening years loss relief that's going to add something to the other loss reliefs that would otherwise have been the only ones available. But more of that after you've attempted example 4. Over to you. Okay, looking at example 4, hopefully no major problems here for you. Same setup as we had before and same approach. We always look, of course, at our start date to begin with, the 1st of August 2020, and determining which tax year does that fall. That again is 2021. That is your first tax year. That is an actual basis of assessment. Therefore, that would be from your start date, 1st of August 20, through to the 5th of April 21. All of which falls within that opening 10-month period through to the 31st of May 21. So you'll take an apportionment of that loss. And that loss, of course, would then be available for relief in the manner that we've seen, again, against total income the current tax year, 2021, and or preceding tax year, 1920. And we made the point previously that it doesn't matter that you only started to trade in 2021. That carry back can go back, will go back, if you claim it, to the preceding tax year before you had even commenced to trade. We're able to carry that back. It doesn't matter that in 1920 you had not yet started to trade. Those claims, of course, if the loss is big enough, may be extended to go against capital gains, but only following the claim against total income for that tax year. and then you can use it as a capital loss against the net gains of that tax year. Any loss not otherwise used, or you've chosen not to otherwise use, that is carried forward against future trading profits of the same trade. So 2021, we know it's a loss, we know where we can use that loss. We also know that if we pick up the first year end that we've got, year ended 31st of May 22, the first year end will be the first time that current year basis may be used, where we'll be assessing that profit of 48,000. So in which tax year does that year end date, 31st of May 22, when does that fall? And that, of course, falls in the 22-23 tax year, and that would be your profit of 48,000. The problem one, as it always is, the second tax year, 21-22, we look to see in 21-22, do we have any accounting period that ends in that tax year? There's your opening period, 10 months to 31st of May 21. Yes, that ends in the 21-22 tax year. How long is it? It's less than 12 months. So for that tax year, you will be using the first 12 months. That, of course, will mean that you're now picking up all of that loss, most of which has already been used in the preceding. It's been allocated to the preceding. That first tax year, 2021, you cannot have it again. And it will be paired with a bit of that profit. So look at the answer to see what those calculations come out to. As we've seen for 2021, we have an actual basis, start date through to following 5th of April. That is 8 months out of an opening 10-month period in which we made a loss of 20,000. Therefore, we have £16,000 loss available for 2021. And again, we are then able to use that, as we have said, against total income, a current year, preceding tax year, extension claim, carry forward claims. 21-22, the second tax year, first 12 months is our basis period. That would go again from start date to a date 12 months thereafter, 31st of July 21. That, of course, picks up all of your opening 10-month period, the loss of 20,000, but we've already used 16,000. We can't have it again. That therefore leaves you with a loss of just £4,000. We now put that together with the remaining 2 months of the first 12 months of trading. That is 2/12 of a profit figure of 48. That is a profit of £8,000. That therefore takes out, uses up £4,000 of that loss, and still leaves you with a profit then to assess of 4,000. So you've used 4,000, the remaining £4,000 of that loss has been used in aggregation against that profit. If you hadn't had that remaining loss of 4 to offset against the 8, this figure of assessment for this tax year would have been, of course, our full £8,000. But the loss of 4,000 has reduced it down to a net profit of £4,000. We then move on, of course, to 22-23, year ended May 22, and we can see that we're picking up all of the 48,000 profit, 2 months of which, of course, have already been assessed within the preceding tax year. They fell into that basis period for the second tax year, and therefore we've got overlap profits that will, of course, amount to that £8,000. Hopefully you've read through all of this. Again, if you have any further problems, as ever, you can always contact me, of course, through the Ask the Tutor forum. Okay, let's go back to your notes now. And what we now see is that when dealing with opening years, we'll define specifically what we mean by that. Then we have this new specialist opening years loss relief. Now, this relief is specialist. It is available for losses incurred in the first 4 tax years of trading. So in the first 4 tax years, going through using your normal basis periods from actual through to CYB, if we get at the end of that exercise for the basis period using our correct basis of assessment a loss figure, then instead of using just the loss reliefs that we've seen so far, we have this new specialist relief that is available to us. Now, it's only going to be any use to us if it allows us to do something that the other loss reliefs do not. And the only way it can get better, given that we already can set off in the current tax year, carry back to the preceding tax year, we like that because that means we can get, of course, a repayment of the previous year's tax. Or otherwise, carry forward, or before carry forward, we may even consider the extension claim against capital gains. Though again, that is probably one of the least likely that we're going to use, given the rate of CGT that is probably going to apply. But that's in Chapter 12. It's not for now. Okay. So this is only available if we have a loss falling into the basis period of any of the first 4 tax years of trading. And the way that it gets better than those other reliefs, those usual normal reliefs that we've just gone through again, would be to allow the taxpayer to carry that loss back further. If you could carry it back not just 1 year, but more years, which obviously you can with this loss relief, then that gives you a bigger chance of using that loss now and getting a more immediate cash flow benefit from it. And what it allows you to do, the relief is available against, yet again, total income, as with the current and preceding tax year claims, but this time of the 3 tax years preceding the tax year of loss. We can go back 3 tax years, not just 1, 3. Again, there is no need for the trade to have been carried on in these preceding tax years, just as we said when, in our examples so far, in the first tax year we've had a loss, we could go back to the preceding tax year and set off against its total income. So here we can go back 3 tax years. If we're going back against 3 tax years, not just 1, then there has to be an order of set-off. Which tax year's total income do we hit first? The relief operates against all 3 preceding tax years, but on a FIFO basis. We go back to the earliest year first. As with current and preceding year, relief partial claims are not available, and hence personal allowances may again be lost. Now be careful here. When we looked at what we saw from the outset in this chapter, relief against the total income of the current tax year and or preceding tax year, it was and or. They were 2 separate claims. If you wanted to claim for 1 year and not the other, you could choose to do that. If you wanted both years, you could choose the order in which you made the claim. They were separate claims. This opening year's loss relief is a single claim, and it goes against all of the preceding 3 tax years, but on a FIFO basis, so you firstly go back 3 years and set off against the total income of that tax year. If the loss is bigger than the total income from 3 tax years ago, then the amount of loss that remains will be carried forward to 2 years ago. You can't say, well, I think I'll stop there. I'll do it for the 3 years ago, but I won't bother anymore. Yeah, you will. You have to. The rules are, this is a FIFO order in which you use it. Go back 3 years against total income, still loss left over, that will go against the total income of 2 years ago. If all that goes, then the remaining loss will go against the total income of 1 year ago. So again, I repeat, it is a single claim against all of the preceding 3 tax years. Very different to the current and preceding year claims, which were either or. You could make a claim for one, not the other. They were separate claims. You choose whether to make either, and if both, in what order. This is one single claim. The loss available for this relief is computed the same way as profit, so as we have just done. So back in that previous example that we looked at, we got a loss of £16,000 there in that first tax year. So in addition to what we've identified down here as being the possible uses of that loss, what you'd also now be able to do is to go back with an opening year's loss relief claim and use that 16,000 against the total income of the preceding 3 tax years, going back to the earliest year first, using it on a FIFO basis. So the year of loss is 2021. So you go back firstly, therefore, to the 2017-18 tax year. Whatever total income you had for that year, you would then use that loss against it. If there was still loss left over, you would move forward to 18-19, pick up the total income, take out the loss against that total income. If on each of these cases it left us with no income, you would removed it all, then you would come forward to 1 year ago, the 1920 tax year, and offset that loss. So one single claim against all of the preceding tax years. The benefit of this, as we have said, is it's allowing you to be able to utilise that loss sooner rather than later. And of course, if prior to starting this trade, the taxpayer had himself or herself there been a higher rate taxpayer, maybe they were, again, the usual path into self-employment is following employment. If that employment had been with a high salary, higher rate taxpayer, then the ability to go back those years and take out to begin with what was higher rate taxable income would of course achieve an immediate saving of 40%. The idea of getting your money back on those years would be great. Obviously in this example, in the second tax year, 21-22, there was no loss. We had used the loss in aggregation, the remaining 4,000. There's no separate other loss relief. Had there been, like there was in our made-up example, then if, as I think in that one, we had, if I recall, we had a £10,000 loss in our second tax year. That was 21-22. Then it's available for a loss sustained in any of the first 4 tax years of trading, of assessment. So there, in that tax year, we had that loss of 10,000. This was in our made-up class example that I first showed you. 21-22 is the year of loss. 3 years back, well, that will go back now to 18-19 tax year, and then 19-20 and 20-21 if necessary. Again, in full, no partial claims against total income. So that benefit of the opening year's loss relief is it's allowing you, therefore, to carry back that much further, giving you a better opportunity of immediate relief for the loss. It's possible, therefore, if we just list out all of the possible claims, obviously we only get to use any figure of loss once, but you've got your specialist opening year's loss relief, you've got relief against total income of the current and or the previous tax year, and we may choose then to include, we don't have to, the extended claim against gains, or otherwise we carry forward against the future trading profits of the same trade. You now have a little example there to have a go at, and what have you got to do? Calculate the taxable income for all years after claiming opening year's loss relief. So a very specific instruction. Here you are going to apply opening year's loss relief. Now, when we did our workings, when we first got introduced to dealing with loss relief problems, we saw there were 2 main workings. There was the working for the tax years in which the loss relief would be used, and there was a loss memorandum working to show how we had used that loss. What you've got here is rather more columns to go on that first analysis, because with a carry back claim, using opening year's loss relief, you can go back 3 tax years. So we started to trade, or rather Fiona started to trade, on the 1st of July 20. That is 2021. The opening period is a loss-making period. So opening year's relief, once you've worked out how much loss falls into 2021, of course, that amount of loss could be carried back 3 years. Well, from 2021, I beg your pardon, that will take us back to 1718, which is why we've gone back there as far as 1718. But not only did we have employment income for those years, but we also had property income. Remember your layout, therefore, you need to have for each tax year, we're going to have to go back as early as 1718 and then go through, well, as far as this information here provided to us will allow. In terms of the opening year's loss relief claim, we will be able to go back and set against total income. So we know that before we started to trade, there was employment income, there was property income. From when we start to trade, there is initially a nil trading income assessment because we're going to have losses at the start of that trade before then moving to, not that there's very much of it here, a profit figure in what is the second accounting period. So you're going to need a lot of columns for a lot of tax years. Take the information from the question, put it in your answer. You have to work out what lies behind the nil assessment in the first tax year, and then separately determine what loss or profit arises in relation to the second tax year. Over to you, therefore, to have a go. Pause now while you attempt that, and then come back and join us and we'll review through it. Okay, looking back therefore to example 5, how did we approach it? We knew that we're going to have to go back as far as 1718 to show the opening year's loss relief specifically being claimed here, because we apply on a FIFO basis. Our first tax year was 2021. Clearly, some of that loss falls into that basis period, and therefore 2021 back 3 years is 1718. We would then work through with, we've just got 2 accounting periods there. Interestingly, the first of those periods is itself a year end. So when you come to 21-22, the second tax year having determined 2021 to be the first year, then you'll have a year ended 30th of June 21. That therefore will allow CYB to apply immediately in that second tax year. Usually we have to wait around till the third year, sometimes even the fourth tax year, before we can use CYB. Not here. It's a simple situation. If you start to trade on a date and prepare accounts to a date 12 months later, with an opening year end, CYB will apply in that second tax year. That is guaranteed. That would mean, of course, that you won't get all of that loss of 12,000 there. Whatever you've used in the first 2021 tax year will already have been utilised, so it's excluded. You can't have it again for 21-22. 22-23 is the first time we'll see that profit being assessed. So to begin with in our answer, we would be able to identify we need to go back as early as 1718. We have losses through to 21-22. Before then, we see a profit arising from the trading, nil and nil, of course, there, before we have that small profit. But the rest of it is copy it in time. The employment figures, employment income figures taken from the question. The other income, I think it was probably property income, but other income there taken from the question. The trading income figures, you had to do the workings we've just explained. There they are. Hopefully you've gone through them and you see what we have. This time none of the loss used in aggregation because we started with the 12-month period. So the first 9 months is allocated to 2021, £9,000. We then get the remaining 3 months because all of the year end June 21 falls into 21-22. Take out what we've used, There's your remaining 3,000. You've had the 9 in the previous year. 3,000 is available for 21-22. What does it then go against? It goes against total income. So establish the total income figures for the relevant tax years. The loss made in 2021 goes back 3 years to 17-18. It was 9,000 against 20,300, brings you down to net income of 11,300. We're told to assume, as we always will be here, that the personal allowance has always been that what it was in your current tax year, 2021, and that means there's nothing taxable. We then had a further £3,000. That was from 21-22, so it goes back 3 years to 18-19. Again, if those figures of loss had been bigger, then they would have moved forward from 3 years ago to 2 years ago, if necessary to 1 year ago. Once again, the problem with them, although the benefit is using more of it more quickly, that is a cash flow advantage, is that if the loss is substantial and bigger than those total income figures in earlier years, then it would eliminate and waste the use of the personal allowance. As it's happened here, only a little bit of our personal allowance has been wasted. But clearly that's a downside, which is applicable to any claim against total income, depending on what the loss is and what that total income figure is. Okay, so before next time, as ever, of course, revise through those opening year's loss reliefs. And that will leave us, of course, one last loss relief itself to look at, and that will be dealing with a loss relief that is applicable on the cessation of trading, and that is terminal loss relief. But again, make sure you're comfortable with what we've seen so far before taking on the next challenge. Look forward to seeing you next time.